Hey, welcome everybody. I'm Stephen Kalayjian, and thank you for joining me to Back to the Futures Thursday here. We're here every Tuesday and Thursday from 1:30 to 2. Wow, unbelievable. Everybody, we saw this big interest rate cut yesterday. Most people were thinking a quarter a point, and then we got the half point. And I don't really like what the Federal Reserve said. The reason why they cut interest rates was because of the fact that they thought that the jobs markets were, starting to tick higher. And it's really, and then he made a comment that really a lot of people have not factored in. And that comment was basically that more people are entering into the jobs market. And that to me, right then and there, was the catalyst, saying that we're having all these people come into our country and the jobs market's going up because of that. And that's the reason why he cut interest rates, right? Well, I don't know. I mean, I have my own thinking and philosophies of this, but basically, I kind of think it was a little geared towards politics, right? But with that being said, who cares? We trade what we see. The interesting thing is we've seen the bond market drop 2 full points since this interest rate cut. And we saw what happened. The S&P futures yesterday pushed up to the 56, 55, 56 level, and they dropped 80 handles, and they were trading around the 50, 55, 85, 55, 80 level. And then boom, we're up 100 handles from here. Unbelievable move here. Actually, I'm sorry, we were trading 57, 65, something like that. And then we dropped. Either way, we gapped up here today. A lot of great patterns. We got the big buy reversals on the 4 ETFs, and we never looked back. I want to show you two great, actually, there's a lot of great patterns. I told you that when you're trading the market, you need to look at correlations, the continuous contract with the underlying ETFs. And when you have this ability to do this, it really opens your horizon. The continuous contract trades 23 hours in a day, and the underlying ETF trades like a stock from 9:30 to 4. And when I look at the markets, based upon my research, you really can't trade without looking at the underlying ETF. So with that being said, I'm sorry, the print low was 56.80 yesterday, 56.79. So after we got that push up from the Fed, 56.55, we pushed down roughly 80 S&P points. I apologize about the number there. I just corrected myself. So here we go. So we look here, on the 15-minute time frames, we gapped up, and this was a beautiful pullback. I said I'd be looking to buy this pullback here. And this pullback was really off of the 5-minute time frame. You got the big positive MACDs, you got the big buying pressure on the 5-minute. The MACDs are positive, and the algorithms flip. And so when we got this, first of all, I had cold shorts looking for this pullback, and we got this big pullback. But more so, what happened was when we got this pullback, we then went, I said, look to buy the Qs. So we got the pullback on this time frame. Beautiful bull flag. And look what the S&Ps did. The S&Ps ran, I believe, from 63.5 up to 83.5, 85. So they ran north of 20 points on the S&P. Again, without this technology, I would never have been able to see this, And again, what confirmed it was the underlying ETFs, because the continuous contract on the S&Ps had a complete different look. And we went from a buy on the S&Ps to what's called a disconnect. Remember, I always tell you every time I come on the show, I have 5 ways of looking at the market. I have a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. So then what basically happened was around 11 o'clock, everything set up. Everything. I mean, I'm looking at stocks like NVIDIA. I'm looking at Apple. I'm looking at stocks all across the board here. the QQQs, the diamonds, everything's set up beautifully here. And what happened? We got this beautiful pullback right here on the 15-minute time frame right here. This is beautiful right here. And then you can see the pullback really deep. So the 15 and the 5-minute time frames really pulled in rather really, really well. And then up, 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 and we never looked back on that. So the spiders pushed down on that 11 o'clock bar, roughly below the 570 level. I think it got down to like 569.80. And look at it now, 569.80. They're up 24, 20. Look at this, S&P's new highs, NASDAQ futures new highs. Now, right now we have a 98 overbought reading on the 60-minute time frame. So I would be looking at short S&P's 89.5 to 96.5 range, NASDAQ futures 68 up to 98 range. I always do ranges here. The 60-minute time frame right now and the 30-minute time frame are extremely overbought. And if you look here right now, you can see on these time frames the importance of how the markets are reacting. And they're reacting in an exuberant way. We're up almost 2% here on the S&P. We're up almost 3% on the NASDAQ. It just keeps going up and up and up. Look, I've been doing this game for a long time. I would be selling into this, looking for pullbacks here. If you're a long-term investor, just because they're cutting interest rates, a good friend of mine sent me a document yesterday that said, upon the Fed starting to cut interest rates, if they do it in a fast way, 1 year from the date, history has shown the markets are down 20%. If they do it in a gradual, they skip a couple meetings and they do a gradual, it's down within 1 year, anywhere from 9.9 to 11.9%. I mean, it's not the end of the world. Brings the S&Ps down on 20%, down to the, say, 5,800, about 1,100, 1,200 points. You're looking at 4,600 on the S&P, which is about right. A lot of gaps would get filled. There are a lot of gaps even going down to 4,250, 4,350, 4,450 in that range, but irrelevant. This is what we're seeing here. I think, again, we're living in a perfect world environment. I don't, and also if you look at the price to the moving average, right now we're over 125, 130 handles for my 10-bar moving average on the daily, and that is just a recipe for disaster, meaning we're going to get some type of a pullback in the next 1 to 3 days here. With that being said, let's see here. S&P futures, again, punching up to new highs. NASDAQ punching up to new highs. So we got the nice pullback right here around the 10 o'clock, 9:50, 10 o'clock right here. We got the really nice first pullback on the 5 and then the 15-minute time frame. Now, what I like to see, this is a nice pullback into the positive MACD, into the rising ADX, into the big buying pressure. This is a beautiful, beautiful pattern. I mean, you cannot ask for anything more. This pullback, okay, we're up 110 handles. This oversold oscillator got into the positive MACD, that's positive divergence number 1, okay? Got oversold into a rising ADX, that's positive divergence number 2. Got oversold into big buying pressure on indicator 2, that's positive divergence number 3. So basically, as I've always taught you here since we've been on, is that you can have a trend, right? Or a correlation, which this is, and then you can have a buy or a sell divergence. And here, off the 15-minute time frame, I said the trade of the day is going to be the 15-minute time frame. I said the trade of the day is going to be the 15-minute time frame, and boy, oh boy, I said between 11:30 and 12:30, it happened at 11 a.m. I want to show you another great pattern here, okay? If you look here on the S&P futures, that's the 1 hour. Let me see the 5. Okay, here's the 15-minute time frame. So you can see, like I said, when we got the push down, the S&P's reversed negative on the 15-minute time frame using my indicator 4 on the 15. But then, if you look here, you can see how the 15-minute time frame reverse to buy, correlating with the spiders on the 15, 30, and hourly charts. Okay. And then what happened? You look to do what? You see this pullback right here? This is the pullback on the 15. And then look at what happened here. This is called a double blue buy signal, which means the 5-minute time frame correlated with its 15, right? But it also correlated with the underlying ETF 5-minute time frame. So when the S&P futures reversed to buy on the 5-minute right here, okay, it correlated with its 15. But when this 5-minute reversed to buy, it already correlated with the spiders on the 5-minute time frame. And then when you look to buy the first pullback. S&P's got down to like 80, and then never looked back. Just ran about 11 handles. When you're trading futures, this is an exact moment of understanding technical analysis. To be able to identify these trades, to be able to identify right now this explosive moves here, right? Again, there were some scalp shorts here. There were some great phenomenal long patterns. But again, it's to be able to move the needle, to be able to identify these trades in such a way that you could be consistent each and every day, to be on the right side of the market, to be able to understand, okay, the 5-minute time frame just reversed to buy. I'm looking to buy the first pullback on the 5-minute. If you look at the YMs, you can see the Dow. I'm staring right at it on that same identical pattern at 1250 when the S&P's pushed down to 4780. The diamonds, right, traded below the 421.50. Now they're up about 70, 80 points. So if you're trading the YMs, you need to look at the underlying ETFs. If you're trading the RTYs, you're going to need to look at the IWMs. If you're looking at the NASDAQ futures, you're going to look at the QQQs. Very, very important to look at this and trade the market the right way. Okay, it's very important for that. With that being said, like I said, we have this big gap up here now. Look at this gap from the close. This 470. We're about $9-10 away. The Qs are roughly about $11 from this gap. These gaps will get filled sooner or later. That's why I'd rather be letting them have them. If you're long things from days prior, whatever, I would be more of a sell into this rally. I don't care if it goes to 5850, 5900. I think that there's more risk to the downside than to the upside, and that's what I firmly believe. Again, if anybody ever wants to talk to me or just shoot the breeze with me about trading futures, I talk to people all around the world. I love it. My number is 914-500-7484. I stream every single day from 9 to 4 on my Trade Easy site. We do a lot of trade ideas. We talk about trade patterns, trade ideas, and it's very, very, it's just an unbelievable community. People really learn. A lot of people made a lot of their money, hit their goals right on the opening today. It was a really great day, and I'm just so happy to be part of Tradier Hub and our Back to the Future show each and every Tuesday and Thursday from 1:30 to 2. Does anybody have any questions? Okay. And again, if anybody wants to really learn futures, it's not a problem. I know I only do a half hour twice a week, but you can really reach out to me, and I really will help you. I think it's really important that you all have the ability to fully understand the futures markets in a way that you can really enhance your trading. Whether you want to learn futures or just baby step it, if you want to trade it or not trade it, it doesn't make a difference. It just really is important that you want to learn. It's another asset if you're trading stocks, if you're trading options, or you're a beginner and you want to be able to learn how to trade futures. Well, then here I am. All you got to do is ask. The only thing I ask of you is if you don't know, please tell me, learn from me, be proactive, and that's why I'm here. Okay, I'm here because I care. My legacy depends on your success. I've known Dan and the crew for more than a decade, and I want to be able to really resonate with all of you on learning how to trade futures. To me, it's the greatest asset in the world. So if we had bought those S&Ps on that pullback around the 80, 80 and a half, 81 level, okay, they just rallied about 12 to 13 points here. The QQQs rallied about $1. NASDAQ futures on that rallied about 35.40. Again, I'm with the 60-minute overbought level right now at 98, almost 99. I say let them have them here. I think that the market by tomorrow, early in the morning, would reverse sometime, and I think that the market is headed to go lower. Okay, again, all predicated on the dailies being bullish, but now I'm going to wait for some type of a pullback and see. August 5th, we had the low of 51.20. Well, I don't think that's going to get touched. Then the low about 2 weeks ago was at 54.12 and a half. I don't think that's going to get touched. So again, it's really, there goes Microsoft there. And again, it really is relevant, okay? It's really relevant to understanding the patterns, understanding the sequence, and understanding, okay, the ability for trading the markets. In trading futures, a lot of people don't understand that. I talked to some of the top hedge fund managers that you need to look at the underlying ETFs in order to trade the futures market. It's really super important that you understand that. And the reason being I say that is because a lot of people don't understand. You just cannot look at the futures markets based upon my research, because my research has shown that you need to look at the underlying ETFs. So one will paint the picture, one will not. Okay, the math is completely different on both, but it's important to have both of them up. So if you look, for me, I have the 30-minute time frame on the S&P futures and the 60-minute, same thing with the NASDAQ. Then I have right next to it the 30 and 60-minute time frame on the underlying ETFs, the spiders and the Qs. Of course, I have the diamonds, and I have the Russell up as well. But then I have the 15 and the 3-minute time frame on the S&P separately. Then I have the 5 and the 15 on the S&P, the 5 and the 15 on the spiders, and then as confirmation, I have what's called the Pro Ultra Short, where it's the underlying, it's the Pro Ultra Short of the SDSs. So it gives me the ability for confirmation on these patterns. Now, right now, we're making new highs here, okay, and the MACDs are non-confirming on the 5-minute time frame. The Dow just ran about 100 more on this here, on this pattern. S&Ps ran 16. So when the algorithm reversed to buy on the 5-minute time frame, like I said earlier, and it correlated with its 15, it also correlated with the underlying spiders on the 5-minute time frame. And when you have that type of pattern, you really want to resonate and understand and say to yourself, right? I look at the charts left to right, so from the 15 over and then top to bottom, right? So for me, I think what's really important is that when you're trading the markets, you want to be able to be in a situation to see the pattern, see everything because everything I do is based upon visualization and repetition, okay? And like I said, I've studied the market so much and for so long that when these patterns set up, they set up in such an unbelievable way that you really need to focus on just trading a certain amount of names, learn the patterns, learn my terminology, learn these indicators, and I think this will help you immensely, right? Also, as I said last time, indicators lag, right? And if indicators lag, that's okay. Price leads, indicators lag, but indicators set up the pattern, okay? So the way I have everything structured, I'm more inclined to look at the market based upon how everything aligns. And when they align, then you go into the markets, and then you're able to then, see the pattern for what it is, whether it's a divergence pattern or whether it's a buy reversal, a sell reversal, and or a correlation pattern. S&Ps, I would look to cover any shorts here, 90 to 93 and a half. NASDAQ futures, 65 to 85 if you're short. Okay. Now, a lot of people have come to me and say to me all the time, Well, Steve, I'm really nervous about trading futures. I've never done it before. Okay, understandable, right? But I really want to learn them, and it's something that I really need to, conquer. Okay, no problem. Well, Rome wasn't built in a day, and you want to be able to learn the markets, and you're not getting any harm done by getting a simulator and trading on a simulator, listening to me, putting the orders in, putting the trades in as it's dropping, getting the hand-eye coordination on using what's called a ladder system. A ladder system is an execution piece. Most people call it a matrix. Some people call it a DOM. I call it a ladder. It's the bids on one side, the offers on the other, like that. Okay, whatever. And you just go click, click, click. If you're looking to buy, and you put your stops in, and if you're buying, okay, 5 or 10 contracts on the micros, and now it goes up, or you can put your offers out, and as it's trading higher, you can see the orders getting filled. A lot of people don't even know how to use the ladders. That's why I tell people all the time, practice, practice, practice on a simulator, right? Practice on a simulator. So today what we did was we gapped up, and the title of the show is how to trade gaps, okay? And the reason why this is important is because a lot of people don't know how to trade gaps. They'll fade the gap, okay, which we did, but you have to recognize when to get back in to go long, okay? And so, like I showed you on that 10-950 bar and then the 11 o'clock bar, these were phenomenal patterns. Phenomenal patterns that set up and really, really, really set up the longs for today. As I stated in my live stream, I said the pattern of the day the trade of the day is going to be the 15-minute time frame. And boy, oh boy, was I right. Okay? Boy, oh boy, was I right. Now, when the 15-minute time frame set up, okay, they didn't get to a deep oversold condition. The oscillator got down to maybe 40, 38, 45. And that's because when you have a big rising ADX, right here, I'll show it to you. When you have a big rising ADX like this, big rising ADX, big buying pressure on indicator 2, the MACDs are positive, this was sufficient. So this push down here on the 11 o'clock bar and the S&P futures were trading, I guess, somewhere in the 64 and a half, I think, 62 and a half or something like that. Okay, and they never looked back. They pushed up, and every pullback, if you look at this chart, every pullback after that, right here, made a higher low. So again, understanding the gap up on the market, okay, on the pullback right before the 10 o'clock number, and then the 5 and the 15 aligned, and this was a trade day. It never looked back. S&Ps are up well over 30 handles off that from that time period. Now, I do expect in the next day or two, okay, for the 15-minute time frame to get deeply oversold, combined with the 30-minute time frame, and that's okay, because what happens is it's a good pullback. Now, if they ever reverse to go negative, it's just going to set up a long on the daily. Right now, I'm looking markets extremely overbought, and if you just shift this over to a daily, let me see if I can put this over to a daily here. Okay, you can see right here, we have gaps here, we have gaps here, we have gaps going all the way back. But you see right now, the spiders, this number right here, 15, represents the price to the 10-bar weighted moving average. This price number here, this 2632, represents the price from where the algorithm reverses to sell on the daily time frame, which is 557 right here. Okay, so if I push this down here, oh, what that's doing, that's not right. The daily reverses, at 546. So 546, S&Ps would need 260 handles to drop before the daily reverses. So you got these big gaps here, okay? You got a gap here, you got a gap here, okay? You can see all these gaps got filled on the way up. This gap got filled on the way down. You got this gap here, just like it got filled, okay? And then, like I said, if you tighten it up, you got gaps going. Oh, look at this gap here. Now, these gaps will get filled, okay? But it's just a matter of when. Okay, this gap here looks like it was filled, okay? And then we got some minor gaps here. The point is that right now you're $15 away from the price to the 10-bar moving average. The norm is 5. The norm is 5. So right now, to me, the markets are really significantly overbought, and I would not want to be long up at these levels. I don't care if they go to 58.30, 58.50. I don't think that that's something that is going to really, if it happens, great. I think it'd be more of a point to exit the markets and then look out below. Okay, look out below. Again, I think that there's an old adage: you sell on good news, and I think the news is in the market. And again, it's really super important that when you're trading the markets, you want to be consistent. You want to be able to identify the patterns. Like I said, if anybody's really looking for help, please reach out to me at 914-500-7484. I'm here to help you. I want to teach you guys futures. Tradier has a great front-end platform, great margin rates, great product, and a lot of people are shifting to futures. I literally got to tell you, it's just an amazing experience of how many people are trading futures today, whether it's just trading micros and eventually getting the confidence when you're trading the right pattern. So, for example, what's the right pattern? The right pattern was the 10 o'clock pattern. The right pattern was the 15-minute time frame around the 11 o'clock time frame, and then obviously the double blue, where the 5-minute time frame, which I showed you, correlated with its 15, but also correlated with the underlying ETF on the 5-minute. If you could do that, you've mastered the art of trading. Everything I do is based upon divergence patterns. This is a significant buy divergence. Indicator 3, getting deeply oversold into the positive MACD. 1, getting oversold into a rising ADX. 2, getting oversold into big buying pressure. Right now, the buying pressure is north of 20. Anything greater than 10 or 15, that is staggering. But again, what you really want to be able to do is to understand how the market works and understand and read these patterns, trade these patterns, and be able to really move the needle each and every day. Again, I'm here. If anybody has any questions, please text me or call me at 914-500-7484. I love this game. This is an unbelievable time in my life to really mentor, to be able to teach each and every one of you. Again, having technology, having a mentor like myself instills confidence, okay? I'll have a great weekend, everybody. And remember, I'll be here next Tuesday and Thursday from 1:30 to 2 at Back to the Futures. S&P futures dropping, NASDAQ futures starting to drop. I'm expecting these 15, 30, and 60-minute time frames to roll over in the next day or so between now and tomorrow to set up some long patterns, especially after you get these buy reversals on the 30-minute time frames. And then I think we're going to get another leg up. And then I think the daily should start working into on that overbought condition to where you're then going to get some type of a decent pullback to set up longs. Normally, the month of September is the markets get kabooshed. Well, somebody's got to tell that to miss the market, okay? Have a great day, everybody. Have a great weekend. I'm Stephen Kalayjian. I hope you have a wonderful day, rest of the day trading. God bless you all.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.